Okay, welcome back to another live stream. I've got my lovely lady behind me who's checking if audio is okay. Is it working? Sounds like it. Okay, fantastic. Welcome back to another live stream. If you do want to go on to my YouTube channel, link is in my bio, you'll have a better experience. And it will be recorded on YouTube. Unfortunately, this live is not going to be recorded on Instagram. But while I do my introduction, please post your comments and questions in the chat and in the comment section. I will be answering them as I go along. The live today is going to be the same structure as we usually follow. I'll do a quick update as to where I am in my portfolio, some challenges that I'm experiencing, and then we'll talk about the obvious rate cut that happened a couple days ago and what I think that implication will be onto the property market and where the rates are potentially going to go. But it's a very exciting time. Obviously, when the rates start to move, that's a huge indicator for property because property is linked to the interest rate. So first of all, an update as to where I am. So I've had quite a few deals transferred this year, and they've all gone pretty smoothly, and most of them are operating well. The one that's now on the radar is a building that is mixed use. It's got retail at the bottom, a few floors of commercial, and then residential at top. I will be doing a release of this case study on YouTube in the next couple of weeks. So I think that's going to be a very exciting one. Keep your eyes peeled. It's definitely the biggest deal that I've ever done. We bought it for 7 million and it's making roughly 200,000 per month in rental income. So if I just quickly work out that yield, 200,000 times 12 divided by 7 million, that's a 34% yield, which is quite insane, but it is commercial. So obviously commercial has higher risk. So your expectation is that there is higher yield. So yeah, I'm excited about that one. It literally transferred today, which is quite exciting. So my team will start the handover process on Wednesday, and yeah, we'll get pro rata rent for this month, and then next month we'll have, we'll see how it goes. I think it's about 85 to 88% occupied, which is good. And then I've raised a little bit of capital now, so I'm looking at my next acquisition. So as part of doing these live streams, it's also an opportunity for me to share my business, and my business model is simple. I take your money, my money, I pull it together with a bunch of people. We go and take our shared resources and we go and invest in property together. So if you like my content, you like what I do and the model and the philosophy that I have with investing, then reach out to me and join me on my next partnership. Your capital gives you a share in my PTY and you get returns based on the investments that we make. And yeah, I'm looking at some really exciting stuff. There's a factory in Germiston that I'm looking at that could give about a 25% internal rate of return, which is pretty crazy. And then there's a few mixed use in Alberton that I'm also looking at. Okay, so before I get into the questions, and please pop them in the comments or in the chat bar, let's talk about what the rate cut is. Now, I think it's really important to understand how our capitalist society is formed, because a lot of people don't really know this, and we don't get taught this at school, unfortunately. I mean, we should all learn about economics, but how a capitalist society works is you've got three levels to it. You've got your reserve bank, you've got your commercial bank, and then you have your retail investor and your institutional investor. You probably actually have four levels. So right at the bottom, we have retail investors. That's you and I. We're just the small fish in the pond that are using a little bit of credit to buy cars and houses and that kind of stuff. That's the retail investor. Then you have, on top of that, you have your institutional investor. These are your companies, your pension funds, your investment firms, your Investex, your bigger players, bigger investment schemes. Then on top of that, you have your commercial banks. Those are the likes of Absa, FNB, Nedbank, etc. And then right at the top you have the Reserve Bank. In South Africa it's called the South African Reserve Bank. In the US it's called the Federal Reserve. In Europe I think it's called the ECB, the European something. I don't know what it stands for, but that's what the Reserve Bank is for. So every capitalist society has the same thing. And what happens at this Reserve Bank level, the Federal Reserve, the ECB, or the South African Reserve Bank, is they define monetary policy. basically they decide what the interest rate is, and they call that the repo rate. So the Reserve Bank here, the South African Reserve Bank, will lend money, because here they can print money and they can change the economic makeup by changing interest rates. What they do is they lend money to your commercial banks, and they lend money to the commercial banks at a rate known as repo. So as of today, the repo rate is 8%. So the Reserve Bank lends to the ABSAs, FNBs, and net banks of the world at a rate known as repo, which is 8%. Then the banks on charge that 8% down to us, and then add a little bit of margin for them, and that's what we call prime. So we as retail investors and institutional investors, we get access to this prime lending rate. So we can lend from ABSA at prime, or depending on your risk profile. If you've got a big balance sheet and you've got good credit history, you can get prime -1 or prime -2. If you work at the bank, you can probably get prime -3. If you're a high risk candidate, you've got a lot of bad debt or you've got a bad credit history, you might get prime +1, +2. Or if you're going into the commercial or industrial sector, you're probably going to get prime +2 to 5%, just because the strategy you're executing is a lot more risky. So we as retail and institutional investors are at the mercy of the commercial banks, and the commercial banks are at the mercy of the Reserve Bank. Now the Reserve Bank, this baby over here, is a non-profit, privately owned institution in South Africa. It's not always a privately owned institution. I think we're one of 9 countries that have a private SARB, but I think that's a good thing, because our government doesn't have a good track record with governance, so we don't want our monetary policy to be muddled up with corruption. And they've got a dual mandate. The Reserve Bank has a dual mandate to stimulate economic growth and create jobs, and to curb inflation. Now, inflation, we all know. Inflation is that thing that makes everything a little bit more expensive every single month. Your eggs, your milk, your petrol, all of that stuff. It's the reason we've all been going through a bit of pressure this year, is because there's been a high inflation and a high cost of living update. So what the Reserve Bank has to do is they push up the interest rates when inflation is high, because they want to slow down the economy. They don't want things to get too expensive, and that makes sense, right? If everything keeps escalating and growing at a massive rate, all of us are going to become broke and struggle to survive. So the Reserve Bank has to increase the interest rate when inflation is high. Then when inflation comes down, which we've started seeing sustainably for the last 6 to 12 months, the inflation rate has come down, then the Reserve Bank has the ability to come down with rates. Another example is when COVID hit, right? When COVID hit, I mean, the whole financial system almost collapsed. I mean, it was a crazy time. So what the Reserve Bank did is they cut the interest rate. They went to, I think it was what was prime at 7% or 7.5% at one stage. That was because the Reserve Bank was cutting interest rates. Why? To stimulate economic growth, to make it more attractive for retail investors, institutional investors to get debt, to buy cars, to buy houses, to build companies, because they needed to stimulate the economy. But then with that, the post-pandemic inflation happened, where everything just started to become really more expensive, so they had to now go up with interest rates. So that's kind of a little bit of a history lesson or economics lesson about what the Reserve Bank does and how it fits into this bigger picture, but it's critical. If you're doing property as a hustle, you need to understand debt. I mean, that is what makes property more attractive than stocks, in my opinion, is that I can use the bank's money to buy stuff. Whereas if I'm doing stocks, I'm not able to get debt. So property and debt are interlinked, and debt is interlinked with the repo rate or with the prime lending rate. So as that fluctuates, it's going to have a massive impact on the performance of your portfolio. Now, before I talk about what this rate cut might mean for the property market and sector in general, let me go through and see if I've got any questions. Okay, so here I've got one on YouTube. I just have a quick question. I'm 17 years of age and I want to get into real estate, what advice do you have for me? Okay, so I get this question all the time. Young people wanting to get into property. I love it. I think it's awesome. The younger you start, the more you can compound, the better it is. So you need 4 things to get started in property. Number 1, you need a stable income stream. Having a consistent income source is crucial for managing expenses, but also securing loans. So number 1, get a stable form of income. Number 2, you have to have a good credit history. Remember, these commercial banks lend to retail investors based on risk. So if you've got an Edgar's account and a personal loan and you're in debt recovery, the bank looks at that and says you're a high-risk candidate. We can't give you prime lending. We have to give you prime plus 2 or whatever it is. And the higher that lending is, the harder it is for you to get a profitable deal. Number 3, you need seed capital. So you need money to make money. It doesn't necessarily have to be your money. All right, you can maybe you've got family that has money, your friends or your network, or maybe you can do crowdfunding or stokvel and you can put money together, but you need some level of equity to put in. And then number 4, you need knowledge. So spend a couple of hours on my YouTube channel, go do a couple of Udemy courses, get a coach, get yourself knowledgeable. So if you're 17, focus on the knowledge portion. Once you've got that stable form of job, get a good credit score by getting a couple of contracts and making sure you honor your obligations, and then build up your seed capital. I hope that helps. What do you think of Airbnb? Yeah, different strokes for different folks. Hey, I think there's many ways to make money in property. Some people love flipping. You buy here, you sell here. By renovating, you add value. I'm not into that. Like that for me seems like a lot of effort for a one-day payday. Airbnb, the appeal is that you can buy in the more affluent areas. So you can buy in, Cape Town, the Atlantic Seaboard, your Sea Point, Green Point. Like you're probably going to have very good occupancy. I think it's a bit oversaturated in Cape Town, to be honest. I think the last time I checked, I stand under correction, but there were maybe 11,000 Airbnb hosts in just that small little Cape Town region. Again, I don't know if those facts are 100% correct. I don't really stay on top of Airbnb news, but I think it's quite saturated and it's seasonal, so like you do well, you do bad, you do well, you do bad. And for me, that doesn't have appeal. For me, I like the consistent monthly cash flow every single month, no matter what month it is. I get the same sort of income. So the appeal of Cape Town is you can buy in the more affluent sector and you can probably break even. If you buy in Cape Town and you're renting out at the normal, like a normal long-term lease, you're never going to be cash flow positive unless you buy the property cash, or it's going to take at least 10 years of servicing the shortfall before you become somewhat break even. The downside of Airbnb is it's tough to manage, it's seasonal, and I think it's quite saturated. Whereas my model, which is to buy affordable low-income housing, is demand is endless, right? Because you have to look at the makeup of our country. Our country is 75% of South Africans rent under 7K per month. So any good business is one where there is more demand than supply, and in the lower income affordable housing sector, that is 100% the case. There are very few landlords that are providing good quality affordable accommodation, and there are tons and tons and millions of people that need that kind of housing. Okay, let's have a look here at Instagram. What questions we've got over here. Sorry, I'm just going through all. How much is the minimum investment on your project? So currently the minimum buy-in is 500,000 Rand. I know that's a lot of money. I would love to make my program a lot more affordable and accessible. I understand that 500,000 is a lot of money, but the problem that I have is if I open it up to 1,000 Rand per buy-in, then I'd have millions of people that want to buy in, and then I'd have to pay dividends to a million different people. And just from an administrative perspective, that's not possible. I'm pretty much running this business on my own. I've got an operational team, and I've got a few people that are kind of, I've got a small team, but we're not like a listed company that can pay dividends to thousands of different people. So it's the burden is that I don't have the administrative resources to be able to manage many shareholders. Like currently I have about maybe close to 50 partners, and that's probably reaching sort of capacity. I can maybe go to 100 partners. As I grow and I get bigger, hopefully I'll be able to list on the stock exchange and create a REIT, a real estate investment trust, and then I can open up the floor to 100 Rand buy-in or 50 Rand buy-in. But right now, minimum buy-in is 500, yeah, unfortunately. Oh, I'm so happy prime rate is going down, 100%. Let's see. We're going to talk now about how prime is going to impact the property market. I'm a new realtor, and how can I find listings outside cold calling and doing door to door? To be honest, I'm not sure. I'm not a realtor. I'm an investor. You'll probably have to, you go find an influencer who's doing the estate agency game and learn from them. Unfortunately, I wouldn't know how to do that. Hello, Darren. What about inflation plus capital gains tax and interest rates? Is resale as profitable on face value? Okay, so Hubert, first of all, capital gains tax is only on the sale of a property. So if you don't sell, you never get paid capital gains tax, right? And my strategy is not to sell. It's all of my assets are held within a trust, which means that when I pass on, my kids will just become beneficiaries of the trust, and they will get benefit from the trust. But there will be no sale. The property won't ever transfer. It will always be held in this one entity, and it will just pass through to create intergenerational wealth. But if you do sell the property, yes, you have capital gains tax. And for those of you who don't know what that means, let's say you buy a property that is worth R1 million, that's your base cost, and 10 years later you sell it for R2 million. You've made a gain of R1 million on that sale, and SARS wants a piece of that. I don't know what the capital gains tax rate is for. I think for the. Let me just check before I make an ass of myself. SARS tax. Let's see what the capital gains tax rates are. So for individuals, it's 18%. For companies, 21.6%, and for trusts, it's 36%. So if you're making R1 million gain in your personal name, 18% of that 180,000 is then SARS's money. Now there is an exemption that SARS allows, that if you buy and sell on your personal name, your first primary residence, up to R2 million of profit is tax exempt. So if you are looking to do a flip, your first flip should be in your personal name, because you can basically avoid all capital gains tax. But yes, capital gains tax does eat a lot of your profits. Inflation, property tends to be linked to inflation. So if our inflation rate is, let's say, 4.5% to 5%, your rental escalation is probably going to be 5.5%, 6%. I mean, it depends obviously on area to area. In the affordable housing sector, we're probably working on like 5.5%, maybe 6% as rental escalation. So your rental escalation will usually outperform inflation, meaning over time you are still profitable. And also a lot of the inflation-linked expenses, so like electricity, water, sewage, refuge, you can pass on to your tenants. So that becoming more expensive has no impact on your bottom line. But yeah, I mean, we also have to be realistic about where South Africa is going. If South Africa has good economic growth, that's going to stimulate wage growth, so people will have higher salaries, and then we can push rental growth. But if you look at Johannesburg, man, that market's been flat since COVID. I think escalations in Joburg from a rental and capital gains perspective have been limited, whereas Cape Town is booming. Cape Town's capital growth rate's insane. So it's still market dependent, but yes, that does erode. What is the return more or less on the 500k? So there are multiple ways that you can look at returns. We can look at gross yield, net yield, internal rate of return, NPV. Those are the four that I mainly look at. Gross yield is gross revenue divided by purchase price. I don't look at anything under 25%. If you're looking in your suburban market, you may be getting 6 to 10% yield. So I won't look at anything under 30 or 25%. Net yield, which is cash on cash day one returns, we're probably looking at between 8 to 12% internal rate of return, which is your return on investment over a 15, 20, 30 year period. I won't look at anything under 15%. And then NPV is the sum of all future discounted cash flows, which, I mean, it depends on the size of the deal. But I mean, your return, it depends what you want to look at. But the one that I look at is internal rate of return. And there is a 15% is what I offer as a minimum. You ever considered township developments, whether multi-let or family homes? I'm sure they can be considered low rental income. Yeah, so I mean, I think townships are definitely considered in that affordable housing section. And I've got a couple of students, and I know a few people who are doing very well in that market. I just don't know it well enough, right? Like, yeah, I don't see anything wrong with it. I've kind of got my niche, and I've built some good knowledge and some good experience in my niche, and that's why I keep exploring it. But I think that backroom strategy in the township has a lot of appeal. You can buy for relatively cheap, and you can get good rental income. How consistent your tenants are, or what the delinquency rate might be, I don't know. On average, how many properties do you invest in per month? I don't really know how to answer that. I try and buy 6 to 10 apartment blocks per year, but it all depends on the market. It depends on how much capital I can raise. It depends on how good the deals are. So maybe on average, I mean, this year I bought 6 blocks so far, and it probably consists of about 50 units. So if we had to say 50 units divided by 9 months, it's about five and a half properties per month. How about buying commercial real estate and renting it? Yeah, so we have got our first commercial property. It's mixed use. It's got retail, commercial, and residential on top. We literally just transferred today, so that'll be my first mostly commercial. It's about 80% commercial office space, that one. So we'll see how it goes. Yeah. Best way to get good credit to buy an apartment is to get a credit card and use it like a debit card. That's going to be the best and quickest way to build a good credit history. Now, what does that mean? It means that you use your credit card to buy things you were already gonna buy. You're gonna buy petrol, groceries, all those things that you need to live. Instead of using your debit card, which has got no value on your credit history, use your credit card. So pay for your groceries with your credit card, pay for everything with your credit card, and then at the end of the month, take the money that's in your debit card, your salary, and pay off your credit card. Because in that way, you don't get exposed to any bad interest, because you're paying off your liability before you get exposed to interest. And you're showing the bank every month that you're using a little bit of credit and you're paying it back. And that's, you're building your credit score. Thoughts on the future of commercial property in South Africa? Well, I mean, this could be a good segue as to where I see the general property sector going. I think the government of national unity has really made a massive difference. We've seen that in the appetite of international investors pumping money into South Africa. Like that's been clear. The amount of cash inflows versus outflows has exceeded for the first time in, I think, 15 years, where there's more money coming into the country than leaving the country. And that all started with the government of national unity, because international investors like the DA. They see the DA as the business-friendly centrist group, and a political party that can bring governance to the table. And I think that that's what our country needs. I don't think that DA is the best party and doesn't include the interests of the majority. I think we still need a socialist liberation type party, but the ANC has lost its way with corruption, so all of their good intentions are washed away because they're not allocating resources appropriately. And we need a bigger economy, so we do need a centrist, business-minded or business-friendly DA or political party to be able to push a bigger economy. So as soon as that formed, international sentiment massively increased towards South Africa. We've seen the rand get better, we've seen inflation come down, we've seen political stability. So I think that, and we've seen load shedding stop, we've seen Transnet getting a little bit of private buy-in. So we're seeing the state-owned entities that used to be a drag on the public purse starting to perform. So I think all things look pretty bullish for South Africa to go through a nice period of economic growth. And as the economy grows, so does the property sector. So I anticipate that we've come out of a buyer's market. I think the last 5 years have been a really good time to be a buyer. And I think we're going to move more into potentially a seller's market where properties are higher priced, it's harder to get discounts, but there's more capital growth and rental escalation. So it's potentially good to be a seller going forward. I think the opportunity to get really discounted cheap properties is coming to an end, at least for the next cycle, right? Because all of this stuff goes through cycle. In terms of commercial, I think there's strong demand. Hey, look, the working from a home fad seems to be disappearing. More and more companies are expecting you to work some days in the office, maybe not full time, but some days in the office. So I think commercial still has a lot of appeal. I know that listed property companies which focus mostly on commercial are doing quite well and are resilient. So I think there is still a lot of profitability there. I don't have that much experience in commercial. Maybe I'll tell you in 6 to 12 months after owning this commercial property for a while, I can tell you what is the return. I've spoken about that. My mother bought a property in 2000 for 300k. This year she wants to sell it for 1 million, and turns out inflation is saying it could be 1.125. What do you mean inflation is saying that? That doesn't make sense for me. Just to break even. You said what? I don't understand your question, Yube. Sorry, man. You're gonna have to type it again. You said you have a business. Are you currently hiring? I'm doing honors and accounting currently. No, I've got an accountant already, and I haven't hired. I don't really hire people. I have consulting agreements. So my accountant provides services for a monthly fee, and my managing agent provides services for a monthly fee. So I don't really have any payroll. I don't have anybody that I'm hiring per se. I just have team members that I pay on an ad hoc, when they do work for me basis. What would an accountant do on a daily in your company? My accountant mostly does my tax returns and my annual financial statements. I run the numbers of my business every month. So I get the rent rolls from my managing agent. I plug them into a system, and then I see where my bad tenants are, where my problems are, and then I meat with them on a weekly basis, and I try and figure things out. So I don't really outsource the accounting or the finance of my business, because that's the heartbeat. Your cash flow statement is the heartbeat of any entrepreneur or any small business. So you have to be on top of that. As I get bigger, that might change. Thank you. I assume you just go to the bank and say you want more money for investment after getting a good credit score. That's correct. You need good affordability. You need good affordability. You need a credit history. You need seed capital. But once you check all those boxes, the bank should loan you money. The Bull. Always good to hear from you, bro. You inspire me. I'm glad to hear it. Cool. I'm caught up with all the questions. If there are any more, just pop them in the comments. I think this rate cut was a good move. I do think that there's multiple rate cuts that still need to come through before we really start to feel the impact. Pre-COVID, what was the prime lending rate? It was like 10%. Inflation is at the same data point that it was back then. And the economy hasn't really grown substantially since then. So a lot of economists are arguing that the Reserve Bank is being too conservative. We've got one of the highest lending rates in the world, and we also have an economy that needs stimulation. We need jobs, man. We need a bigger pie so that more people can eat. So I think there is quite a lot of pressure on the Reserve Bank to become a lot more aggressive in declining or going down with interest rates, and hopefully the pressure mounts that they do that, because obviously as property investors that makes our lives a bit easier. Our debt becomes a lot more manageable. It's cheaper, so we'll see. I do think the knock-on effect though is that the buyer's market ends. high interest rates. What's that quote? More millionaires are made during recessionary times than during good times, and the reason is because people can buy assets at discounted prices. You can only buy a property that's worth $1 million for $700,000 during economic depressions or during downtimes, right? Because sellers are not going to sell their property for less during good economic times. They're going to wait for the market, or they're going to wait for their buy price. So I think that yes, it's good that we're going to start seeing a reduction in our bond rates, and our monthly bond obligations will be a little bit less, but it's going to make it harder to find good deals. Lorenzo, how much do you think will the next rate cut be, and when? The next time that the Reserve Bank is meeting is in November. That'll be their last meeting for the year, and I suspect that will go down by 50 basis points. I guess it's more of a hope. Though there have been multiple economists that I follow and that I've been reading about, and they all suggest that 50 basis points seems quite realistic. Otherwise, we'll see maybe a 25 basis points in November, and then next year we'll probably see a full percentage point go down. So hopefully by the end of next year we'll be at that 10% mark, which is what we were pre-COVID. I think that's realistic. Anything below that is a dream. If we can get back to like 8 or 9%, then I'd start looking at fixing the interest rate, because then we're in attractive, then we're in very, what's the right word? Yeah, just in a very good space to fix our rates. If I put 300k into a South African inflation calculator and set the date to 2000, if I calculate what it should be in 2024, it should be 1.12 million to retain the same value as 25 years ago. Okay, that's cool. Yeah. So is it better to flip houses than purchasing apartment? No, that's not what I said. I said that investing is a personal decision. It's depending what you want to achieve, what your risk appetite is, what resources you have available, as to what strategy you will do. Now, the strategy that works for me is buying and renting out apartments, because I'm looking for a recurring passive income stream. That's what I want. For somebody who wants to do interior design, loves creating new beautiful architecture, and wants a 6-month roadmap to making money, they want to buy now and 6 months later they want to make a profit, flipping is the better strategy. For somebody who's got a low risk appetite and wants to be in the affluent area but still wants to get rental yield, Airbnb makes sense. So it's that's the thing about financial advice, is that people want to give it, or they want that advice that's applicable to everybody. But yes, there are some principles that are applicable to everybody, but investing is a personal choice. It's what's your risk appetite? How much money do you have? How much money do you have to lose? How old are you? What are you trying to achieve? All of these factors will merge together to decide, do you invest in stocks or property or gold or crypto? Is it possible to delay a loan for 15 plus years from a bank to have positive cash flow, invest in more properties? Is it possible to delay a loan? Don't know what you mean by that. What do you mean delay? I don't think it's possible to delay a loan. You can buy a property cash if you don't want to have positive cash flow. Okay. As an investor, when interest rates go down, do you tend to borrow more from the bank, or would you still look towards private financing? That's a great question. I would look more at bank finance. Yeah, for sure. Private finance is very expensive, because the only way you're going to get private investors to give you money is you're either going to offer them a hell of a good interest rate because they're taking a big risk, or you're going to sell equity, and equity is hella expensive. So no, I definitely used a lot more private finance now, because the prime lending rate has been very expensive. But now that prime is going to start coming down, it's still very high. It's still very expensive. Prime is sitting at 11.5%. That's still crazy high. Once it's at that sort of 10 or sub 10% category, I'll probably back off from private finance quite a bit and move more aggressively towards institutional finance. That's a great question. It means you understand the concept of any partnership in the pipeline. Yep, I have 4 deals that I'm currently chasing, and I've raised about 7.5 million, but I'm closing funding at the moment. So you can still reach out to me if you want to be exposed to this partnership, but you'll need to commit in the next day or two, just because you've met me at the end of the cycle, right? I started raising finance about 3 months ago, and I need to draw a line in the sand at some point so that I can start executing. I don't understand what's going on here, but I'm interested. Well, welcome aboard. Hopefully you've clicked subscribe or follow, because I talk about financial literacy all the time, and it's important to know how the economy works and about finance, because no one's going to care about your money as much as you do, and it's your duty to create generational wealth. Even if you come from generational poverty, you can't change where you come from, but you can change where you're going. I would like to get into real estate. You got me thinking of purchasing apartments. Thanks, coach. You're welcome. Can you recommend the name of economists you listen to? The main guy, what's his name now, man? Jeez, I don't know if you've ever had this in 30 seconds, or when you play those general knowledge games, but the person, I've read his name 50 times, and I cannot think of it now. Let me just quickly research economists. Where's his name? No, I can't think of his name now. But I really like MoneyWeb as a website. I like The Daily Investor. I like, there's a show by Simon Brown. What's it called? It's a podcast. That's a really good one if you want to get exposed to financial news. It's, the MoneyWeb Now podcast is really great. That's a good economics one. I love watching Bloomberg as well, but Bloomberg is global and probably a bit more US based. It's quite hard to find a good South African company that's doing South African podcasts and news. But yeah, Daily Investor and MoneyWeb Now would probably be top ones I'd go for. Did you have to go to college to gain the type of knowledge you have about real estate, or you learned yourself? I actually went to university and I studied computer science, so that's my background is IT, and that's what I do as a day job. I work as a cybersecurity architect for a US-based bank. That's my day job. But no, everything I learned about property was through the hard knocks of school fees, of just doing this game in and out. And it's possible to learn these strategies. I've got tons of content on YouTube, and there's tons of other influences that you can find online. We're in a world today where there's so much access to knowledge. Actually, that's not an excuse anymore. You can't say that you don't know how to do something. When you have access to YouTube and TikTok and Instagram and Udemy and all these different courses, when I started, call it 10, 12 years ago, there was no influencers doing what I'm doing now. There was no one really creating content or teaching the ropes of the affordable housing sector. There were some people in the US that were, sharing their strategies, but it's not relevant for us, right? You can see a US person do something and you're like, sounds great conceptually, but it doesn't mean anything for me as a South African. But yeah, you've got access to tons and tons of knowledge. The problem with YouTube and the problem with this access to all of this information is that now you have to curate the information. Now you don't know who to trust, or who's legit or who's a scammer. So there's tons and tons of knowledge, but there's small pockets of good knowledge and pockets of bad knowledge, and sometimes you get distracted by the bad knowledge, or you get distracted by the junk. Social media is all about gaining your attention, so it's all built to try and keep you numb, to keep you fixated. So a lot of social media is just full of garbage, man. It's just full of drama and so finding the good quality content is good. Any financial books that you'd recommend? I would recommend a book called Financial Freedom Through Property. That is actually my book, and it's in exclusive books, also in the links in my bio. That's a good book to get you started on property. Otherwise, I really liked, I like anything Tony Robbins writes. So he wrote a book called Money Master the Game. It's a thick book, but incredible. He's also got one or two other books. Unshakable is good if you want to get into more like stocks and shares. Warren Buffett is my favorite investor of all time. So Long Walk Down Wall Street is one of his books. I also really liked 4 Hour Work Week by Timothy Ferriss. It's not a property book or a financial book, but it's a productivity book. And the thing is, the better you can use your time, the better your return on time is, the more wealth and profitability you can build, right? So if you do a normal day job and you're earning 100 Rand per hour or 200 Rand per hour, you're never really going to become financially free. You're never going to have a lot of disposable income to compound quickly to create wealth. Like, you need to be earning 1,000, 2,000, 5,000 Rand per hour. The more that you can get in the shorter space of time, the quicker you can build disposable income and the more you can invest and compound and thus create wealth and financial freedom. So 4 Hour Work Week is what helped me figure out how I could do my corporate day job in 2 hours a day instead of 8 hours a day, which then bought back 6 hours of my day to be able to invest in my side hustles. To partner with you, do I get to hold on you, and are we going to meet in person for trust issues? Olani, why do you have trust issues, man? Have you given money to the wrong people? Unfortunately, my partnership is not about us meeting in person and going to view the property together. You trust me to go and do this work, and if you don't trust me yet, then rather just keep watching me. Go watch my YouTube channels. You'll see I've been consistent for 10 years. And that's why people trust me with their money, because I've consistently been online and I have a very strong brand. I'm happy to meet with you, don't get me wrong. We can do a Zoom call. You can ask me your questions. I'll give you reference testimonials. I'll send you numbers of people who I've partnered with before. You can quiz them and ask them questions. That's totally fine. But for me to move forward with the property deal, I can't go and meet for coffee each partner that wants to meet. Like I said, I've just got too many partners at this stage. Is MyRoof a good app to find property at a discounted rate? I mean, MyRoof is where you can get access to properties that are going on auction. So yeah, there's probably a couple of good properties there, and there's a couple of overpriced properties there. It's not the best channel. It's just one of many channels to find properties that are being foreclosed on. What app do you use for real estate? I use myapp.property. It's the one I use. When is your next cycle for properties, for partnerships? I mean, look, I'll probably close one now. Early next year, Jan, Feb. I'll do some Instagram lives and some content leading up to it. Do you provide a strategy in your book? Yes, I do. I don't know whether you listen to Robert Kiyosaki, but he usually talks about the global market crash. How close do you think we are towards the crash, and how badly will it affect South Africa? So I used to be a big follower of Robert Kiyosaki. I loved his book Rich Dad, Poor Dad. But in the last 5 years or so, he's just become a fear-mongering. I don't know. I don't even listen to what he says anymore. He's been talking about the great market crash for I don't know how long. The idea that we're going to have a financial crash is possible. The way our financial markets are set up is not really sustainable. We have trillions of dollars of debt in the US. I mean, that's never going to get serviced. So there's definite flaws in our financial market, but a crash that's going to take out and wipe out the whole system, I don't see that being the case. But what is good financial advice and a principle to adhere to is diversification. So you need some money in property, some money in stocks, some money offshore, some money onshore. You need some money in gold, some in silver, some in, as long as you've got diversification, you can protect against all the different fluctuations of a market. look, if the financial market crashes and you've got property and you've got gold, then you're pretty secure because those hold value. If all your money is in the stock market and the stock market crashes, okay, well then you're a little bit screwed. If you have all your money in crypto and crypto market crashes, then you're a bit screwed. So you have to have diversification, but I'm not a big fan of Robert Kiyosaki. I think he's a fearmonger. I don't know what he's trying to sell. Obviously trying to sell a course or a program or something he's trying to sell. For an average earning person, how difficult is it to get a home loan to do partnerships? Do you assist with that? I don't assist with helping you get a home loan. That's your own business. I don't recommend that you get a home loan to buy into my partnership because you're servicing the debt. I don't service the debt for you. So it's more for people who have disposable income and have that 500,000 saved in an account or in an investment that's not performing well for them and they want to reallocate it to a better performance. Those are the people I'd recommend to. Okay. Cool. I think I've caught up with all the questions. Are there any last few questions? Are there any noteworthy trends in Cape Town that you have observed? Also curious, I know you focus on Joburg, Cape Town. Do you ever consider other provinces? I mean, the Cape Town market's interesting. It's definitely an anomaly in South Africa. I mean, it's tracking more like the European and the US index in terms of growth. And that's specifically Cape Town, eh? Like, I'm not talking about any of the outlying province areas, you know. I mean, not even the southern suburbs or the northern suburbs or Blouberg. Like, just Cape Town, Atlantic Seaboard, Sea Point, Moolie Point, Town. That's tracking to property prices that you see in Europe. Like, I mean, I was in Paris in July. And I mean, there the property prices are disgusting. But then you come back and you look at Camps Bay, Clifton, Sea Point, Bantry Bay, and I mean the prices are pretty realistic. So the reason why Cape Town does well is because it has a lot of international appeal. It's a well-run government for the elite. Obviously, the DA doesn't do enough for the poorer people of Cape Town, but they do very well for the inner city and for the Atlantic Seaboard. So you've got your rich Germans, Americans, all of these people that have much stronger buying power. They come to our cheap country. They use their very strong currency of dollars or pounds or euros, and they buy property that is quite cheap relative to them, very expensive to us, but cheap-ish to them. And they just push the price of all property up there by Sea Point, Green Point, all of those areas just go up and up and up. Because there's foreign direct investment. And then, you know, your wealthier South Africans who can't afford those extreme prices then go to the southern suburbs, northern suburbs, and that's why you just see this bubble forming in the Cape Town area where there's just this incessant growth. And I don't see it stopping, to be honest. But yeah, I don't really look at other provinces just because I don't have roots there. I've got roots in Joburg and I live in Cape Town. So I think the KZN market has a lot of appeal. I think it's a little bit riskier. I think there's a lot more political instability in KZN. I think the Eastern Cape, you've got some small pockets there, like PE is pretty good for student housing perhaps. I think Bloemfontein or Free State for student housing is also quite strong. Yeah. Robert has been yapping for years now. I don't even feel him. You mentioned variation. Do you do financial advice or do you recommend somebody? I don't do financial advice. I mean, I give financial advice all the time, but I'm not a financial advisor. My best advice for you is to not hand your money to somebody else to manage it yourself. So I'd rather that you spend the next 6 months just putting your money into a savings account, but you're reading books, you're watching podcasts, you're watching YouTube, you're learning about investments, and then you start to invest your own money. I mean, if you know, because most financial advisors, and I mean this with all due respect, there are some really great financial advisors out there, but for the most part, financial advisors are employees who are trained to sell products. I mean, I had a financial advisor at Discovery who sold me the Discovery products because that was the highest commission earner for her. You know, and 5, 6, 7 years later, I looked at my returns and I was like, is that it? No one's going to care about your money or your financial situation as much as you do. So take control of it. Don't outsource it. Be the captain. What about Umhlanga and Durban? Probably a good Airbnb market, I would say. Have you ever had problems managing all the various investors and related properties that you've invested? No. So far, it's all been good. I'm good at managing expectations. So I don't sell a dream. I don't sell something that I can't achieve. So everybody that I sell into my programs have a pretty realistic idea of what the risks are, what the potential returns are, and then I just, I communicate with my guys monthly and I give them updates so that there's no real surprises. What other assets do you look into as an investor? I have commodities, I have gold and silver, I have stocks, I have offshore accounts, I have a few other businesses, I have multiple streams of income. It's very important that you have multiple assets, not just property. Okay, I think that's about it. I'm going to call it there. Thank you very much for being a part of this live stream, and if you do want to watch the recording of this session that we had today, go to my YouTube channel. This video will be available to my members first for 3 weeks, and then it will be live to the general population. So until next time, happy investing.